The market's still down, the bearish sentiment continues. What's going to give this market a boost? It needs it.
Okay, before the end of the first quarter, we expect that speculators would come in. Not for the long term, but I mean, pre-release of results from big corporates in Nigeria. If you look at the prices of the performance of Nigerian Brewery in particular, we've seen a drop today. I know that all through December, the price of Nigerian Brewery and conglomerate that were into beverage production shot up marginally though, compared to what international markets are doing. But basically, what you're seeing is profit taking. That's what I'm trying to emphasize over here. And then some banking stocks also, GT Bank and IBTC didn't do too well today. Ordinarily, these are very, very good banks. And I mean, looking at the trend of their prices, people are taking profit basically.
Obviously, what we saw near the end of last year was that the fixed income market became the lifeblood of the NSE. What are yields like? What's the investor appetite like on the fixed income side?
Okay. It's a very inverse yield curve on the bond. I'll start from the bonds. On the 2013 maturity, there's a bond going to mature next year, February. That's about the 13-month bond. It's actually very attractive right now. The yields opened today at 16.25 and has dropped to 16.19. And there's tendency that it will close at sub 16 before it actually stops trading, because our bonds will stop trading a year to its maturity, because it's then assumed the status of treasury bills basically. The longer tenured bonds were bought a lot in the last few, let me say, in the last 1 year. So the yields range between 14, 15. They are lower than the short-end bonds basically, because PFAs and other non-financial institutions invested heavily in them. But basically, another factor that would help determine the direction of yields in the fixed income market is also what the CBN does. Analysts and the entire industry, the financial industry, await what the CBN will do with, the Monetary Policy Committee would come out with this year. I mean, this is the beginning of the year, and then looking at what had happened in Nigeria recently.
Okay, let's talk about what is likely to come out of the Monetary Policy Committee when they meet on the 30th of January. We know December inflation moderated a little bit, 10.3%, slight drop from November, but it's expected that this year inflation could rise as much as 200 basis points. We could be talking about 14% inflation in Nigeria. How will the MPC deal with some of those variables?
Yeah, the CBN governor himself said that it's very possible that by half year, inflation could reach 15%. But using the MPR rate to tighten the economy might be too drastic. I mean, increasing it to match inflation might be too drastic. What we are looking at will possibly be the continued use of open market operation T-bills to limit the amount of funds in the system to curtail inflation. MPR, monetary policy rates themselves, do not just curb inflation alone. They determine lending rates and all other rates in the economy, and then you don't want to tighten things too much. You want to activate an economy that is our costs are going up based on what has just happened with the removal of fuel subsidy. So I'm sure they will do more of OMO, T-bills to mop up funds, and then we may see maintenance of MPR at 12.
Okay, we're also getting reports that the Debt Management Office intends to issue 10-year sovereign bonds to the value of about 230 billion naira in the first quarter alone. What's the appetite going to be like? Because we do know that government in general is trying to reduce on its borrowing.
Okay, that in itself means that investors and financial and non-financial investors would come in. That's PFAs and banks, and then insurance companies who invest in these bonds will come in very aggressively. Because if you see the timetable they've drawn out, I mean, for the FGM bonds they will issue all of 10-year maturities, the timetable shows a decline in volume to be issued from 90 to 70 and then 55 billion. So it's a clear direction. I mean, it's a clear way of it's a clear it's clear
okay,
that the government is going to reduce the amount is going to borrow, basically.
Okay.
So going forward, we will see people coming in very aggressively to getting the best yields possible.